Mayuresh Joshi is also with us from Angel Broking. Mayuresh, good afternoon. First, a call on BHEL itself. That's the stock of the moment now, up 4%.
Afternoon, Manoj. I think one really needs to understand the implications of what the government ban is all about. So yes, as you rightly pointed out, I think a sentimental positive as far as BHEL is concerned as of date. But clearly, I think the operational performance has been weak. You're probably looking at a working capital cycle which is highly constrained. You're probably looking at execution issues still plaguing the balance sheet, and that is what is probably taking a toll in the return ratios. So clearly, I think when you adopt protectionism measures for a particular industry, as you rightly pointed out, I think you really start doubting on the status or the health of that industry overall. Clearly, I think the capital goods space generally, Anuj, is going through very difficult times. You're probably looking at order flows coming at a very slow pace. There is very gradual recovery, as you see, in execution going through, and probably BHEL stock is demonstrating all that. So I think a sentimental positive, one really needs to understand this news item, but operationally and fundamentally, I think the fundamentals and financials still look weak for BHEL.
Okay, so the financials still look weak for BHEL in the near term because of this cushion to domestic manufacturers that the government has come out with. Perhaps we could see a technical bounce. BGR Energy is the other one that suddenly spiked up about 5% odd. So just to just to clarify, Mayuresh, you would not advise any investor to buy these stocks purely based on this news flow, right?
Oh yes, absolutely, Sonia. I think one really needs to understand the intricacies of what this really means for capital good companies.
Okay, Mayuresh, stay on with us. Let's just discuss some more stocks where we have seen quite a bit of interesting last hour move. Adani Enterprises, ever since the numbers came, it's been the most volatile stock. If you see the intraday chart of Adani Enterprises, that one is now down about 1.7% from the highs. Just Dial actually has been one of the stocks of the day or of the last 2 months or so, and today also there's been a wealth destruction of about 8%. In fact, from the peak it's now down 70%, and it could well slip. It's actually lifetime low for Just Dial because it listed much higher than its IPO price and is trading at these levels for the first time in its trading history, and 530 or 540 was the issue price, so very close to that as well. But one of the stocks of the day is Shriram Transport Finance. So let's address those earnings. Umesh Revankar, MD of Shriram Transport, is with us. Mr. Revankar, good afternoon. What led to the 11 basis point improvement? Mr. Revankar, thanks a lot for your time. That's Shriram Transport down about 4.5%. But we need to focus on market a bit because the market is now at low point of the day. In fact, if you pull out the intraday chart of the Nifty and see the drag, and some of the stocks which are dragging the market now include Dr. Reddy's. That's seen a bit of an intraday slide. Tech Mahindra, ahead of its numbers, is sub 500, so that stock has also seen a big decline. But really the big worry now is ICICI Bank. Let's pull out the intraday chart of ICICI Bank, and it was weak through the day, but now it's 5% lower on ICICI Bank, and that really is the stock that's dragged the market. 216 was its previous 52-week low, so that's the reference point that you need to keep in mind. From 216 there was 217.8 actually. From there it was quite a bit of rally that you had seen, or recovery that you had seen, and now all of that has been lost, and single-handedly dragging the market to low point of the day is what we have on ICICI Bank. Let's do one thing, we'll take a break on that note. Then up next we have slice of an exclusive conversation that Udayan had with Nomura's Prabhat Awasthi.
I still think that China has to do some fiscal stimulus. It's quite interesting, that dilemma that China has. If Japan comes with liquidity-driven monetary policy, and so does ECB, which is obviously going to help depreciate their currencies, it's welcomed by the markets. But if China does it, it's not. So I think it has to do some fiscal stimulus to assure us that the economy is going to grow at that new target of 6.5% over the next few years. If that happens, then obviously you would see a better backdrop for the Indian markets. But I'm thinking that if earnings can grow anywhere towards 10% this year, then probably that's where the markets can move during the course of the year. We've probably got one more quarter of pain, and again I think we're slightly confused because the RBI has their kind of list of corporates, and we're not sure who's kind of providing or not providing, and it's a bit confusing in that respect, and I think that's why if a bank, if any bank is not, if we don't feel that it's disclosed properly, then we're just taking the worst as is going to happen going forward, and therefore you're getting a re-rating of the stocks. I think there's also, downgrades to a lot of the banking sector. I believe there's downgrades to State Bank of India today, and I think that just keeps the negative kind of thought around the sector.
Okay, that's the word coming in from Andrew Holland. But let's get back to the markets now. As we told you, there is an intermediate positive for some of these, capital goods makers. The government has banned capital goods imports under the EPCG scheme for power generation. So what this means is that the cheaper imports of capital goods will be banned, and that opens up more demand for the domestic players like BHEL, BGR Energy, etc. Remember, these companies still are plagued with very stressed balance sheets, execution issues. So it doesn't mean their problems will be over, but perhaps the demand for these companies could go up in the very near term. We'll try and get you more details on what this would mean for many of the power generators. We have Mr. BP Rao, who's the former chairman and managing director of BHEL, who joins us now. Mr. Rao, good afternoon and thanks for joining us. How much of a positive would this really mean if the government indeed has gone ahead and banned capital goods import under the EPCG scheme?
See, it is a well-known fact that the capital goods demand itself has shrunk in the last 3-4 years, and it is just started slightly to increase from this year onwards. But under these conditions, if the good news that the capital goods imports are banned under EPCG scheme for the power generation sector, definitely this is a big positive for the domestic companies, who are engaged in manufacture of these power plant equipments. And that is definitely a boost. The sector is slightly showing signs of revival, and this will further add to that. And definitely, all these companies, what you mentioned, definitely this is positive for all of them.
Mr. Rao,
that much more increase of the demand in the market.
Sure. Mr. Rao, hi, good afternoon. Since you headed BHEL in the past, and it was a hot issue when you were there at the helm of BHEL, if you could quantify, what this means for a company like BHEL.
Well, I don't know the quantification-wise, because under EPCG scheme, how much imports are being done, I don't have any figures readily available. And so that much more definitely will be available for the domestic companies as far as the demand is concerned. But mostly, I must tell you that the imports under EPCG for power generation equipment has been more or less confined to the, the lower levels of the ratings. The higher level of ratings have been very less. Because the power generation equipment is one where it needs a continuous service. One has to be locally present to be make the equipment work.
But do you have, Mr. Rao, do you have any indication of how much the Chinese imports were impacting the industry, in the sense what percentage of the total industry uses Chinese imports, how much has it gone up by, and if you can also, just give us any indication of how much the rebate was earlier, just to get a sense.
See, that's what I was coming to. The Chinese equipments were, in the past, about 3-4 years back, the imports were quite high. They have almost received 50,000 megawatt and above, kind of orders with Chinese companies. But after their performance in the market, the Chinese equipment performance in the market, the Indian power developers have started turning towards the domestic manufacturers, particularly. Who went in for the first sets of Chinese sets, they have come back to domestic companies. So that way, and in fact, Chinese companies were also not able to compete with respect to the prices also in the market in the recent past. In fact, the domestic companies have nearly overbid them. In fact, I don't see many of the Chinese companies participating in the market except in one or two, Tamil Nadu state and all that. But otherwise, I don't see them participating in the market. So that way, Chinese companies' presence has been coming down in the domestic market. This will further give that kind of push for the domestic companies, and Chinese companies will become much more difficult for them to come and participate under the EPCG also.
All right,
so
Mr. Rao, thanks a lot for your time today. So that's the view on BHEL. Meanwhile, the market has now at the low point of the day, as we pointed out, ICICI Bank, by the way, has hit a fresh 52-week low while we were talking to the former BHEL chairman. And Mahindra, pull out the intraday chart of Mahindra and Mahindra as well, and that stock also trading at low point of the day. We'll take that promised break and come back with that conversation with Prabhat Awasthi.
Welcome back to NSE Closing Bell. We had promised you the discussion with Udayan Mukherjee and Prabhat Awasthi. Prabhat is the head of equities at Nomura, and he said that the Bank of Japan's move to go into negative interest rates was unexpected and surprising. Listen in.
Well, it's not really, as much a liquidity tool as a rate signal, Udayan, and I think this was clearly not expected. I don't think anybody sort of expected Japan to go into negative interest rates. There was some expectation that they will raise the QE levels, but it was not expected they'll go into negative interest rates. So I think it was a surprise to the markets, and I think market is therefore understandably confused about what it means. We saw even Japanese stock market sort of doing a very sort of volatile move on the day it was announced, though they have since stabilized. But I think the essential issue is that from Japan's perspective, obviously it is an attempt to sort of weaken the currency, get the growth back on track, which has so far stubbornly refused to go up despite huge amount of asset purchases. So I think it is the next step in the sort of unconventional tools that the governor has been following. What it means to the rest of the world, I think it definitely does mean that there will be some liquidity infusion to the rest of the world, given the fact that the interest rates in Japan have turned negative. So outflows hopefully of capital will increase. From the market's perspective, the question essentially is twofold. One, we've been dealing with slow growth that has been visible, but I think of late we've been dealing with macroeconomic uncertainty with regard to the liquidity itself. And while the central banks in Japan and Europe have been easing or have been on the easy side, there has been some drying up liquidity, effective liquidity for emerging market assets. To the extent this move sort of assuages those concerns, that will be positive for risk assets. So I think from market perspective, it is more important to sort of get some sort of comfort about the flows rather than the growth, which is still looking very shaky. You saw the Chinese data this morning, weaker than expected. So that the fundamental data points on growth have not turned around at all. They've only worsened in last 3-4 months globally.
The more you speak to global analysts, they seem to be suggesting that the headline numbers are probably overstated. Most people say that China cannot be growing at 7%. Some even question the Indian data, looking at the top line numbers of the large companies, saying this is not consistent with 7.5% growth. Do you fear that actual global growth this year might be marked down more than even what the conservative estimates have been at the start of the year?
So then our economy team globally does believe that the growth will be lower, especially in China, where we are talking of 5.8% growth, which is much lower than consensus. Actually we are the lowest on the street. So we do think there are headwinds to Chinese growth. So obviously stemming from there, our view might be slightly different from where the world view might be. But we are definitely concerned on growth. So far as India is concerned, what you have is what you have, right? So we essentially, based on the data we have and the methodology we now follow, we do believe that there will be some improvement in growth. Now also remember that we are living in a highly deflationary environment, especially with regard to commodity prices, and the top line growth and the real growth are diverging markedly in India. I think for the first time the kind of divergence we're seeing, I think is unprecedented, because the kind of decline in commodity prices we have seen in 1 year was something, the kind of increase, $30 to $100 crude price increase happened over a 5-year period, but we got all that decline in just 1 year. So there has been a massive deflationary pressure. It doesn't take away from the fact that volume growth in India has been slightly better this year across sectors. So just looking at top line of the companies would not really give you a picture of real growth. I think real growth and inflation, obviously the pricing power are most diverse this year than any time in history. But as I said, I mean, we do believe there will be some growth tick up in India on the methodology that we currently adopt, compared to last year.
Alright, well, you can catch that entire conversation at 6:30 p.m. today only on CNBC TV 18. Okay, those are M&M's sales numbers that have come up for you on your screen. It will just flash for you in a second from now. The auto sector sales have been released by the company. Total sales growth of 10% is what you're seeing at about 49,000 units. 43,000 units, 789, that's the number, versus about 39,930 units. So that's a decent growth of around 10-odd%. Passenger vehicle growth has come in at 13% at 22,088 units versus 19,573. And utility vehicles have also grown about 13% at 21,034 versus 18,550. So not bad really. It's a decent double-digit growth that you're seeing for the company. Commercial vehicles have grown by about 11-odd% and exports have grown by about 7-odd% for the company. So that's the word coming in. The management said that we are happy to have achieved a growth of 10% because the newly launched KUV 100 and TUV 300 has seen a good response and increased demand. And we've seen good growth in MH series and the export performance. In fact, let's go across to our guests and find out more. Mayuresh, we've had a mixed bag this month around. Maruti has been disappointing, but M&M is not too bad. It's a 10% growth that we've seen overall. What has your pick of the pack been?
So clearly, Sonia, I think Maruti disappointed more so on the export front, but even on the domestic side, clearly I think the product mix is not probably working in their favor. Having said that, probably even in the numbers that had come through, the margin compression that we probably saw because of the higher spends on the advertising and promotion part, I think did take a toll. Add to that, I think if the yen appreciation continues for the better part of this quarter, you're probably going to see margins get impacted by that as well. Clearly, when you're talking about M&M numbers and what we're probably seeing at this point of time, I think a decent set of numbers, and clearly if one looks at the new platforms that have probably come through, KUV 100, TUV 300, I think those platforms are very well received, at least as the channel checks that we've done probably in the market. So clearly I think M&M in terms of both valuations at this point of time within the four-wheeler space along with Tata Motors look like a very feasible option.
Okay, well, a couple of stocks looking good now. Eros International, of course, has been one of the big stocks, or one of the big gainers through the day, and it's adding some more now, 17% higher on that. Whirlpool is the other one where we have seen big gains, and that stock also is going home with some good gains. So there are a couple of stocks which are looking quite good, but really the problem point for the market still remains ICICI Bank. Sudarshan, at what point does this become a buy, or is this, is this out of buying, at this point in time, and out of question to buy this stock right now? 218 now, fresh 52-week low.
No, it's now out of question because it's not just underperforming the Nifty, it's underperforming the Bank Nifty, which was very rare for ICICI Bank. So it's so significantly underperforming its own sector index that we shouldn't be looking to buy it. It's an avoid completely.
Okay, Ajanta Pharma's numbers also on the screen now. That's one of the best performing stocks, remember, of the last couple of years. And total income 473 crore versus 408 crore. So that's a growth of about 15% thereabout. EBITDA growth somewhere about 12 to 13% from 145 crore to 163 crore. Margin has fallen a bit, 34.6% versus 35.5%. So that explains that EBITDA growth is not in line with the sales growth. So that's the other stock that we're tracking, apart from Mahindra and Mahindra, which has recovered quite a bit.
Oh yes, so those are Ajanta Pharma's numbers. The stock is up almost about 3-odd%, reacting to its earnings. Mayuresh, you want to come in on that? Just a quick word on Ajanta Pharma. It has been delivering, so 111 crores versus 93 crores, which is not a bad performance. And last quarter also was good for it. So how would you react to the stock today?
No, clearly on the face of it, Sonia, I think the numbers look quite reasonable. So clearly the stock has been, as you rightly said, an outperformer for the better part of the last year. So clearly I think one also needs to look into the aspect on the kind of base that they're probably working with. But numbers not at all bad. I think they're quite reasonable of what I've seen so far.
And 34% margins are actually better than what they did last quarter as well. Last quarter they did about 33%. This time they're at 34%. So the margins have picked up sequentially, and it's a 20% profit growth. Good numbers coming in, decent numbers coming in from Ajanta Pharma once again. Sudarshan, this has been, as Anuj was pointing out, one of the big gainers last year. Technically, how does it look now at this 1300 price?
See, technically, it's, I think a lot of consolidation is likely to happen in the stock. On dips, when you see the stock fall 4, 5, 7%, depending on how it behaves, it's a buying opportunity for a short trading bounce. Don't go short in it. Buy it on days when it is having an off day. I don't expect a big move coming.
Okay, Mayuresh, a word on both KNA and Vedanta. Is the price action telling you that the merger is more or less certain to be called off?
Not so sure, Anuj, but clearly I think this has been on everybody's mind. So clearly I think one really needs to look at what kind of agreements will come through if it does happen. But clearly I think going by what we've seen in terms of core numbers, and that is what I probably tracked, I think the core numbers have not been encouraging for both Vedanta as well as KN.
Alright, let's do one thing, guys. Let's take a break on that note. By the way, there's some tractor sales numbers also coming in for M&M. So 15,065 units is the overall tractor sales for M&M, which is not bad. It compares to 14,913. So that's okay, about a 1% growth, but it's a growth nevertheless that you've seen in tractors. We've seen a lot of weakness for other tractor makers like Escorts, etc. But at least M&M has reported a tad bit of a growth. Domestic tractor sales up 4%. So 10% growth in passenger vehicle sales and about a 4% growth in the domestic tractor sales. The stock is also just about flat. But our closing bell money control question of the day is to do with Maruti. That was one of the big talking points today. The sales hit a 9-month low in January. Will the stock see lower levels? Log on to moneycontrol.com, post your responses there, and we'll read out some of the most interesting ones post 3:30.
Renault Passion for Life presents Headlines of the Day. Brought to you by Renault Passion for Life.
Welcome back. You're watching Closing Bell, and it's flat, but as we said, it's really been all over the place. Market turnover is high today because of that volatility. 15,000 crores of cash market volume and about 1.5 lakh crore F&O volumes. Varinder pointed out interesting bit today. Kotak Mahindra Bank's market cap at one point today was higher than ICICI Bank. You know, whether you want to call it, ICICI Bank being too inexpensive now, or Kotak being a bit expensive, or whatever the market's preference for Kotak over ICICI Bank. But we know the difference in size between ICICI Bank and Kotak. To have this kind of catch-up of market cap of Kotak to ICICI Bank probably could be the story of the day today, on a day when ICICI Bank fell 6% and made a new 52-week low. That's really been the telling story of this season.
Oh yes, and also I feel, the market is perhaps giving more valuation or higher valuation to companies that are giving higher disclosures. And classic cases, ICICI Bank versus Kotak Bank. Kotak Bank had higher amount of disclosures this time in its earnings versus ICICI Bank that perhaps people don't know, or there is lack of clarity on which which account could sort of go bust.
Yeah, also because the market's preference is very clear now. They want to be with the retail-oriented banks. They don't want, the market doesn't want to touch the corporate lenders. ICICI Bank and Axis Bank are the prime examples. On the other hand, HDFC Bank, IndusInd Bank, and Kotak Mahindra Bank are closer to the. It's a bipolar bank nifty today right now. You have ICICI Bank, Axis Bank, and HDFC, and the two big ones actually trading at 52-week lows, and you have Kotak Mahindra Bank, IndusInd actually, and HDFC Bank actually trading closer to 52-week highs. It's been that kind of disparaging performance. You won't see that with the PSU banks. In PSU banks, you will see PNB, BOB, SBI all down 40-45% or are all up 40-45%. But this time, the market is telling you something. It's getting nervous about ICICI Bank. And I know some people bought it on Friday. A lot of institutional players did buy on Friday. But you do get a sense maybe some more is left in ICICI Bank.
The market is making a distinction. Look at Yes Bank. It's up 15% in 2 days. It had a long list of disclosures that it gave post its numbers as well. So the market is now making that clear distinction. But let's do one thing. Let's go across to Mangalam. He'll tell us what the dealers are talking about straight from the dealing rooms. Mangalam.
Well, the simple thing that the dealers are saying that they are looking to sell at every rally, because if you look at it, they have seen stiff resistance coming in for the Nifty at around 75, 65 levels itself, and we have fallen from those levels quite a few times in today's trading session itself. As far as the flows are concerned from the institutional desk, they continue to remain mixed, but all eyes as far as the dealers are concerned are on the RBI policy meet tomorrow, where the street is expecting a status quo. What is not helping the markets is also the fact that the earnings season has started off to a bad start. Remember, we at CNBC TV18 were doing the analysis where 25 out of the 15 Nifty companies have reported a poor set of numbers, and there is a risk of further downgrades as well. So that's the sense one gets as well. At the same time, if the markets do manage to stay above that 75, 65 levels, any counter trend rally which is there cannot or is unlikely to sustain beyond the 7,700 mark itself. And as we speak, you all were talking about banks, so the dealers are also talking about banks, and the Bank Nifty is currently trading closer to the low point of the day. SBI as well as ICICI Bank dragging the Bank Nifty itself, so we may see some delivery based selling on those counters as well, despite some delivery based buying in ICICI Bank on Friday's trading session.
All right, Mangalam, thanks a lot for that. Well, let's go across to Ashish Kayal, who will now tell you what to buy or sell today for a reverse trade tomorrow. Ashish, hi, good afternoon.
Afternoon. Hi, so the stocks that I would recommend for buying today is going to be Infosys. We have seen some smart recovery in Infosys from the levels of around 1,130, and it has done exceptionally well. It has also bounced back from a crucial moving average of around 20 days. So I think the short-term trend is going to be positive, and it's from the defensive side. So I think ahead of the policy, it's better to stay with Infosys. And one is to maintain a stop loss of around 1130, and target can be expected at 1230 on upside. The next stock on the buy side is going to be Sun Pharma. We have seen some exceptional rally in Sun Pharma from the lows of 800. We have even given buy call a few days back, and we maintain the buy call even now. And this stock has a strong potential to reach towards the zone of 920. And also there was some consolidation, and we have seen a strong breakout. So I think Sun Pharma should be poised for much higher levels, and one can buy it at PMP with a stop loss of 840, and target can be 920 on upside. And the third call is on the sell side is Just Dial. We have seen some very poor performance after the results are announced, and the stock has really capitulated. However, post the fall from 750 onwards towards 600 zone, we have not seen any kind of meaningful bounce back. So this is suggesting that the short-term momentum on downside should continue in this stock, and one can maintain a selling strategy. So any rally can be used as a shorting opportunity, and the stop loss has to be maintained to a short-term near 600, and target can be expected at 515 levels.
Okay, thanks for that. Well, I just want to point out that Ajanta Pharma has now released their details of the breakup in their India and their emerging market business, and it's looking quite good. So the India branded business has posted a growth of 17%, coming in at 128 crores, while the emerging market business on the whole has grown 22%, with 40% sales of 22% overall for emerging markets. Africa has grown 40%, and Asia has grown 4%, while Latin America has degrown about 31%. So most markets for them have done well except Latin America, and the India business is also quite strong for Ajanta Pharma, a healthy growth of 17%. That stock is holding up with a gain of almost 2.5% now. Varinder is also with us. He'll talk about some buzzing stocks that he has observed in the last 10-15 minutes. Varinder.
Sonia, since you're referring to the results, look at some of this company companies which are buzzing on back of results. Balaji Mines up 15%, EPC Industries, Avanti Feeds all moving up over 10%. But there are many companies or the stock prices which are not doing well. Look at NCL Industries down 15%. Naveen Fluorine, which was up nearly 15% last quarter, is down 12% after missing on the estimates. That stock is bleeding today. Suzlon IFB Industries also they are moving down. Some of the mid-cap gainers, surprisingly, there are few stocks which are doing very well today. Look at Eros International up 15%. Kaveri Seeds out of nowhere, that stock is up 12-13%. Kitex Garments up 20% for in the last 2 days. Ad Labs has seen good buying today. Tata Elxsi, this is one stock which is trading near lifetime high, has been just gaining since last few days. Whirlpool, IDFC Bank, this bank has been just gaining since last few days. Actually, this bank has recovered nearly 30% from the 52-week low. It touched 1 month back. Dalmia Bharat Sugar, Future Consumer Enterprise, Subex, Gati are all stocks which are moving up today. Some of the small cap gainers, look at Pranav Ditya Spinning Mills, Himadri Chemicals, Venus Remedies, Jyoti Structures, PTL Enterprise, CJ Finance, Tirupati Industries, Aero Textiles, Vijay Textiles, Amulya Leasing, Gayatri Sugar, Anu Limited, Sumit Industries, all these stocks are moving up today.
All right, Varinder, thanks a lot for that. Just about 12 minutes left for markets to close. Neeraj Diwan of Quantum Securities is also with us. Neeraj, good afternoon. The stock of the day today has been ICICI Bank, down 6% yet again. Fresh 52-week low. How do you approach a stock like this?
Yeah, good afternoon. Yeah, actually the kind of selling we are seeing in some of the PSU banks, and ICICI Bank is also falling similarly or even more than what PSU banks also falling. But I think one should just stay on the sideline and make the stock make a base, because we've been talking about 50-week lows in ICICI Bank for the last 2-3 weeks now. Every week it makes a new 50-week low. I think better to be on the sidelines, wait for the stock to settle down. Maybe we can buy it a little more expensive, because even though the commentary was concerned, even the commentary said that next quarter can be equally bad. So, that's why people are not too sure whether everything is still priced in, or there can be some more surprises also. So I would rather wait to invest in ICICI Bank. There are definitely other options which are available in the market, and we better to, even if you see the private sector bank, I would still prefer Axis Bank from ICICI Bank. So rather invest in that rather than ICICI Bank.
Okay, so better not to invest or just to stay away from ICICI Bank for the moment. So that is clearly the stock of the day. But apart from that, Neeraj, the other stock that everyone's talking about is Maruti, and how it's come off quite a bit in the last couple of months. Post the weak numbers this month, what do you do with the stock? Do you sort of book your losses, profits, whatever, and move out for the time being, or do you hold on?
Actually, Maruti has been under our coverage, and for the last couple of quarters we were not too comfortable with the valuation. The stock had run up a lot, but after this current fall, now it's fallen below 4,000, and now even on valuation parameters it's available at about 23 odd time FY17 EPS. So now it is coming as a cumulate as our coverage also. So I think that any dips in Maruti should be used to accumulate the stock, because even taking a moderate growth next year, you are getting a stock at a reasonable valuation now.
Okay, that's on Maruti. But just to discuss some more stocks then in today's trade. Sudarshan, one of the strongest stocks has been Asian Paints. It had some profit booking after strong numbers, but after that we have seen a big move again, and it's now closer to its life highs, just about 4% away.
Yes, Asian Paints was also a buy idea. So it's one of the better stocks to be in, and if you do want to invest in stocks or trade in stocks, Asian Paints is a buy on dips opportunity. Every time it falls and we start saying the valuations are high, it should be bought into.
Okay, that's on Asian Paints. But what about two of these stocks, Sudarshan, ICICI Bank and Maruti? How does one approach it technically now?
See, ICICI Bank is I think Anu just asked, it's you don't touch it, and there is no bargain hunting here, because we don't know where the lows will be, and it is a stock that's underperforming the bank nifty clearly, even the private sector banks, the public sector. I mean, you don't touch it. We don't know where the end will be. But for Maruti, it's a short of the year, true, and it's falling, but at some point Maruti will find strong support. Broadly in the 33-3400 area, Maruti should get support. If that support holds, it will become a buy, but we have to wait for that level.
Okay, wait for those levels. But let's discuss some more stocks then. Mayuresh, how would you approach something like a Z Entertainment? That stock has also been quite volatile. It's not done much today, but it's been one of the strongest stocks.
Well, yes, Anuj, and if you go by how the results have been, I think the results were extremely good in my opinion. So clearly, if you talk about how the expectations on the ad revenue part are, I think we still believe of a 21-22% kind of growth on terms of ad revenues going forward. In terms of subscription, I think it might be a little bit lesser in the next 2 years, but as digitalization picks up, we're probably looking at even that aspect of the business picking up for Z. Clearly, I think the sports business and the losses thereof are largely factored into the price. So clearly, I think in the valuations, if you compare that over the last few years at fair levels, our take is that the growth can be quite stupendous over the next few years, both on the ad revenue as well as the subscription part. Again, a clear disclaimer, I think we might be holding this stock on behalf of our clients and our funds.
Okay. The other stock that should come up for you is Amara Raja Batteries. That company announces its numbers tomorrow, and ahead of that there's quite a bit of buying that we're seeing in Amara Raja. It's up about 5% right now. This time the numbers are expected to be decent, so about 11% revenue growth. The margins will improve because of falling lead prices. Mayuresh, come in on this. If I remember correctly, you do track this stock. The problem with Amara has been that the growth rate has been slowing down in the last couple of quarters. Ahead of its numbers, how would you be positioned?
No, clearly, I think we remain extremely optimistic, Sonia, on this stock. And if you look at the revenue mix, 45% comes from the automotive part, 55% comes from the automotive part, 45% comes from the industrial part. And yes, I think in terms of the volumes, I think they have done a decent capex over the past few years. I think those capex initiatives will start paying off as the economy recovers, specifically on the industrial side. So you're looking at large VRLA batteries coming through. You're looking at the tubular component segment, which is expected to do exceedingly well. And when you're talking about data spectrum and payouts happening in terms of expansion of the network by telecom companies, I think the industrial segment is expected to do well. On the OEM side, I think you've seen some amount of stickiness, specifically on the four-wheeler part. But as new platforms start coming through, our own take is that the top line growth can be quite reasonable over the next 2 years. So clearly, I think margins are seeing the benefit of falling lead prices, though I think the pass-through is happening at the current juncture. My own take is that with expectations of lead prices expected to remain benign, the input cost deflation will be effectively realized even on the bottom line. So clearly, I think Amara Raja, both in terms of an earnings outlook and again valuations, similar to Z, I think they're not cheap, but again, I think the premium valuations for Amara should sustain. So I think we're clearly very, very optimistic on Amara over the next years.
Okay, by the way, BHEL intraday chart would tell you that all the gains were wiped out in last 10 or 15 minutes of trade. So that's an interesting stock. From the stock reaction or earnings reaction, Navin Fluorine is now down 13%. So it's been one big punishment given to the stock after the kind of numbers that it posted. Last quarter was good, but this quarter wasn't. Just about 4 minutes left for market to close. Sudarshan, any BTST idea that you have on top of your mind right now?
Well, I would be a short seller in PSU banks. So two stocks that come quickly and that I'm tracking is Can Bank, where it is possible to take a short sell today for tomorrow, and very unfortunately State Bank.
Okay, Neeraj, from the list of result reactions in the mid cap space, anything that has caught your eye where one can still go ahead and buy?
Actually, we're looking more at large cap space right now. I think some of the stocks under our coverage, one is LIC Housing Finance. So that, I think even the results are pretty impressive, and that valuation wise also is pretty attractive. So LIC Housing is one. And among the mid cap also from the housing finance only, Indiabulls Housing also has a good valuation, it's trading at a good valuation. So that also has a decent upside from these levels based on the results that are posted this quarter.
Okay, just about 4 minutes left for markets to close. It's been a very volatile day. Normally the market does not, or the bulls don't like volatility. So it will be interesting to see what kind of next few days we have, because at this point in time, the Nifty has given classical sign of a first sign of reversal, that is from 7600, which is the congestion zone. The Nifty has reversed nearly 50 points, so that's something that the bulls would not like. Let's do a quick recap of today's trading action then. Stock of the day, clearly ICICI Bank. single-handedly dragged the markets today. If it wasn't for ICICI Bank, the markets would have closed in the green. It was that kind of a day. 5.5% lower on ICICI Bank. Maruti Suzuki also broke down, so 4% lower on Maruti Suzuki. That's the contribution chart. 20 point gone because of ICICI Bank, and Nifty ends down by about 10 points. Maruti Suzuki down about 4%. State Bank was down about close to 4% as well. Bank of Baroda. In fact, if you look at the top 6 losers, 5 out of them were banks. ICICI, SBI, Bank of Baroda, Axis Bank. Then you had other stocks like Dr. Reddy's, Hindustan Unilever, Vedanta was down 2%, and Ken was up 2%. So there's a bit of a message in there as well. NTPC was down 1.5%, BPCL 1.5% lower, Z Entertainment was down about 1%, Tech Mahindra was down 1%, Ultratech Cement as well was down about 1%. But there were a lot of stocks which supported the market today. Right on top was Larsen & Toubro. That stock was up 2%, though it came off the morning highs but still ended the day in green. ITC was the other one, up 1.5%. HDFC Bank was up about 1%. This stock is closer to its highs rather than lows, so that stock was up about 1%. Then you had a couple of other names like Bharti, Coal India, Yes Bank, Adani Port that did well. And apart from that, some gains in stocks like Infosys, Wipro and HCL Tech as well. Bank Nifty was the clear drag today, down about 1.3%. Mid caps, well, all over the place. 1:1 advanced decline ratio, but lots of big movers and shakers today.
Oh yes, there were. So since it's split down the middle, I'm going to start with the gainers because I am an eternal optimist. So on the gaining list, you have Balaji Amines, which has reacted positively to its numbers. Ajanta Pharma reacted positively to its numbers as well. A couple of odd gainers included names like Whirlpool, Kitex Garments that have just made a bit of an attempt to rebound. You had the Subex that gained about 10%, IDFC Bank, all of these have been beaten down names, remember. Manappuram General Finance was up about 2-3%, and Ashok Leyland post a good set of sales numbers, went up in the green, up about 2% Eicher Motors as well, both the commercial vehicles and the Royal Enfield sales have been good this time, so Eicher Motors goes home with a 3% gain. On the downside, Just Dial has seen a bludgeoning once again, 52-week low, down 7%, Syndicate Bank down almost 6%, Reliance Communication down 3%, Suzlon down almost about 8% and a couple of other names like EIL, etc. Unitech as well, the lesser said about that stock, the better. But overall for the market, Anuj, it's a flat day. That's what the headline index showcases, but we know that beneath the surface there's been plenty of pain.
Yeah, you said you are an eternal optimist. I'm a realist when it comes to markets, and today has been the first sign that the market has given you that maybe one more round of pain is left in the market. I think the profile of stocks was telling you that, Sonia. I mean, you could be, we could all go wrong, but at least the indication is there. If you look at the top list, there's a bit of a distribution going on with a lot of individual names. That's not good news. When stocks like Suzlon, a couple of others like Just Dial and all start to fall like this, then you know that there's some bit of problem. Look at stocks like Syndicate Bank, even the big ones like ICICI Bank. There's a bit of a problem clearly for the market. Neeraj, from a portfolio investor point of view, this has been a horrendous year. We have seen immense wealth destruction. How should one approach the market from this point? Should you be looking to change your portfolio, stick with your stocks? What should be the broader call on the market now?
I think as far as investment is concerned, I think these are opportunities which should be used to invest in the market. We saw the market, I think 7200 kind of levels. So we bounced back from those levels. So some consolidation, and after this kind of a run up, some more selling will definitely happen at these levels, because as far as global markets are concerned, still things are not very clear, and even domestically there are not triggers that are coming for the market. So most of the results which have been coming now for the last 2-3 days have also not been that great. So one needs to take a little longer term view in the market and invest in those stocks where you feel that earning visibility will be there. For take an example of Maruti, where the valuations were expensive, so with the correction the stock corrected. But we know that with the pay commission hikes and with the growth that will going to happen in the economy the next couple of years, Maruti will again, when the volume will definitely go up. So you have to use the opportunities to buy these kind of stocks with 1 to 2 years perspective.
Some of these FMCG names, Mayuresh, had a good run this quarter. For example, Marico, its margins went all the way to 19% versus 16% earlier. Imami was not too bad as well. Any top picks in that space?
So clearly, Sonia, I think it's a very evident story of probably price corrections ensuring that the volume growth happens for a lot of these companies. With a lot of input cost deflation coming through, you're probably seeing gross margin expansion occurring for most companies within these sectors. A few of them that you mentioned, like Marico, I think gave an exceptional performance in my opinion, both in terms of how volumes grew and the kind of management commentary of maintaining that volume growth along with the margins that the management is probably looking at. But clearly, I think we were looking at stocks like Britannia at higher levels. They've corrected. I think we're waiting for that correction to probably happen. So I think investors should probably be in a wait and watch mode. I think if the stock corrects further, our own take is that the premiumization story should continue for a stock like Britannia, along with the cost optimization efforts that the company is probably embarking upon. So clearly, I think Britannia, if it corrects further, I think becomes good entry points for long-term investors. And again, I think Godrej Consumers, in my opinion, has given an exceptional set of numbers. I think if you look at the overall business mix, whether that be the hair color business or the insecticide business, our own take is that if you combine all the business together, I think the volume growth has been quite decent. We still expect decent volume growth to go through over the next 2 years. So clearly, I think Britannia Godrej Consumer is something that I look at on declines from the FMCG bank.
So Darshan, what about Infosys and in fact the rest of the IT sector as well? It's clearly been an outperformer.
It is, and Infosys is a buying opportunity. It's a very large trading range which is lasting about 7 to 8 months, and Infosys at the top of that range, on the verge of making lifetime new highs. So let's say that lifetime new highs would coincide with the breakout of that range, and that's a fairly bullish sign. So independently, Infosys is something you want to buy at current levels without worrying about where the levels are. For the other IT stocks, they are likely to be laid back. Currently, IT is going through a short-term rally. That rally may end in consolidation. So of all the entire series, the stocks, only Infosys is a buy for the intermediate term.
Okay, gentlemen, we'll close this discussion on that note. Thanks for joining us. The final tally on the Lal Street is absolutely flat for the Sensex and the Nifty, but there's a tinge of red, and you can see that in the Bank Nifty down more than 1%. And that's perhaps because the Dow Futures is also indicating that the start in the US could be on the red side. So there's been a bit of caution in our own markets as well. But coming up, it's a mixed bag for the auto companies in January, as Maruti's sales have hit a 9-month low, while Eicher Motors, Ashok Leyland and M&M have seen a steady performance. More on that in a bit.